time for In the Money, stock market action on AM 820 News. Here's Chief Market Strategist Gareth Soloway from InTheMoneyStocks.com.
Good afternoon, everyone. Great to be with you here on this Sunday, February 9th, 2014. Another wild week on Wall Street as most investors found themselves getting whipped back and forth. And again, we saw the markets with some major downside on Monday, a choppy Tuesday and Wednesday before big rallies Thursday and Friday. All right, and this is the key. The average investor continues to kind of wonder where this market's going. And if you've been listening to this show, In the Money Stock Market Action, and again, my name is Chief Market Strategist Gareth Soloway from InTheMoneyStocks.com. If you've been listening, then you've basically been making money hand over fist. And think about that. The markets which have fallen from the beginning of January when I first started this program, all right, and I came out right away on those first couple weeks, on those first couple Sundays, and I said, listen, you got to back off your investments. This market is going to take a dump, all right? And ultimately it did. And then just over the last couple weeks, we started taking some long positions. And sure enough, the long positions paid off. And we saw by this Friday, the 5 trades I gave you last week, last Sunday at this very time, 4 of them were solid winners. All right, the one stock that did not go up was Freeport-McMoRan, FCX, which was only down 6 cents, and that's a $32 stock, folks. I wish all my losers were only down a couple pennies. That would be amazing. But bottom line is 4 great winners here from last week and 1 small loser of a couple pennies, just a couple pennies down. All right, and that type of winning percentage is commonplace for those who know how to read the market and stocks properly. Now, 99% of people don't know how to read the stocks properly and the market properly, and overall we're looking at charts and we're kind of figuring out exactly how to read them. Also, we're looking at emotion, and emotion is obviously something that every person, every human being has to go through. But once you gain control of it and once you understand what goes on Wall Street, you're able to conquer that demon and you get on the right side of the trade instead of the wrong side of the trade. All right, so again, just in the last 3 weeks, 12 winning alerts with only 2 losers, and both of those losers were just for pennies. All right, and as I've said before, you know, every time I give a trade that doesn't work out, I donate $100 to charity. And again, Metropolitan Ministries for this quarter. So at the end of the quarter, I'm going to be writing a check of whatever that is, whatever that amount is, and I will be giving it to Metropolitan Ministries here in Tampa. And again, that's one way we can do some good here. And what I'm hoping for, and I said this every show, is that as I'm making you guys money on these 4 winners this week, I think there were 2 out of 3 last week and 5 out of 5 the week before. All right, as I'm giving you guys these, I'm hoping as you're making money, you're going to just donate a little bit to charity and kind of pay it forward as well. And trust me when I say it comes back around. And funny thing is, just since I've started this in January, I started this show in January, started doing this charitable kind of work. My day trading account, and I day trade every day along with swing trading, which is what I help you guys do here, which is more for people that work 9 to 5 and aren't able to sit behind their computers nonstop throughout the day. But my day trading account alone has increased in value by 50%. That's in basically a month and a week. And that's, we're talking about, I think I started the year with about 84,000, 85,000. And I think January I made 40,000 on that, and February so far. Last week, first week of February, I made about 7,000 day trading. So, you know, bottom line is, I'm a true believer that paying it forward does work, and karma does work as well. So it's good for us to do this, and I encourage you to do it as well, because I'm telling you, it comes back around. Not only does it make you feel good, which is a benefit in itself, but again, it'll come back around, you know, somehow, some way. All right, the bottom line is this: these methods that I'm using to give you market and stock analysis, that the biggest institutions, they don't want me to give it to you. All right, the biggest, and I'm talking about just the top 1% of these institutions, these big banks, they probably use what I'm using here, but they don't want me to give it out. Because if I give it out to everyone, then all you investors out there will start making money, and the transfer of wealth issue will fall apart. Now, what do I mean by transfer of wealth? Well, basically, those people that don't know how to invest properly, they just go in on a whim, on a gut, on whatever. And that whim or gut is stimulated by institutions pumping, okay, or analyst upgrades or this and that. I mean, again, I use the example almost every week, but think about Apple. All right, Apple used to be a $700 stock in 2012. And at that point, there were analysts galore at $700 per share upgrading it to a $1,000 price target, this and that, and that was the top on the stock. So my point is, as the analysts were upgrading it, it triggers an emotional reaction in the average investor who's not in that stock to buy that stock. First of all, they've watched it go up countless days, weeks, months, years, from 100 to 200 to 500 to 700. So they're already feeling like they've missed that boat. And then all of a sudden, these analysts who supposedly know something, which most of them don't, these analysts come out and upgrade it even more. And so now the average investor says, oh, wait, man, so I guess there is more upside. So I guess it's not too late to get in. And what happens? Well, the average investor, you, me, and everyone else, we buy in at the highs just as those institutions are saying, yeah, this is great. Let's just sell right into them. Then I get out of our positions because these guys are willing to buy. And remember, when I sell a share or if I sell a stock, someone else has to be there to buy. There has to be an exchange there. That's the whole idea of a market, that someone else has to be buying when you're selling, someone else has to be selling when you're buying. So we have to see through this nonsense. And again, the stuff I'm revealing here at In the Money Stock Market Action on 820 AM News Talk Radio is, how to get around that, how to see through that nonsense so you don't have to be one of the sheep anymore. All right, start being one of the wolves, okay? And I don't mean that in a bad way. I just mean start doing what everyone else is doing that's making money in the market. All right, and listen, last year was an easy market to make money in. Easy. You went long, you closed your eyes, you went to bed, you woke up, and you made 30% on the year if you were long the whole year. All right? This year, we can see it already. It's not that way. All right? A lot of people get carried away, and they get very confident after a 30% increase in a year when the market's basically floated up all year. That's exactly the response that the Wall Street, big banks, institutions want you to have. They want you to feel so confident that you keep on throwing more money into the market as they're just selling into you, just like Apple at $700. And we can already see this year that it's not that simple. And again, if you had gotten out of the market or shorted the market at the highs, you would have made a ton of money on the way down. Then this last couple of weeks as the market bounced, you would have made more money to the upside. And while the average person who was just sitting there, sitting on their hands, were probably have been down around 4 or 5% at this stage of the game, 3, 4, 5%. People that did the right things, if you reacted based on what I've been saying, you're up 7% or so, maybe even more, 8%. And that's 8% in a market where the average person holding and just buy and hold mentality is down 3, 4%. So net 12% gain, we'll call it. Net 12%, just like that, in the first month and a week of the year, 2014. All right. Bottom line is, again, guys, I am here to unveil the nonsense, unveil the misinformation. I want you guys to start learning how to just profit in any market. I want to reveal Wall Street secrets, and ultimately you guys should be on the path to profiting for life. All right, one thing I want to make extremely clear. I talk a lot about the shadiness of Wall Street here and the kind of the scams, if you will, but I don't want you guys to feel like, well, I give up and I walk away. I can't even deal with this, because the bottom line is, as long as you learn how to do it, and it's not that hard, to be honest, you're just going to go the opposite way of your gut, basically, then you can make money. But again, I get the sense that sometimes people think, oh, it's such a rigged game, why even bother? Why even invest? Well, if you don't do that, then obviously you're not losing money, at least, but you should be making money. You should be making money in this market, hand over fist, frankly. And that's what I'm doing, and I'm just following what I'm telling you to do. Okay? All right, so I just wanted to get that through. I'm going to give you guys the call-in number. I hope we get a couple call-ins here. First half of the show we can call in, and then what I want to do is step into an interview today that I recorded last week. I had a great chance to sit down with G. Edward Griffin, who's a best-selling author, film producer, and political lecturer. He's the foremost authority on the truth behind the Federal Reserve. We all think that, the Federal Reserve is here to save us, right? Wrong. And it's amazing because, the politicians are hailing Bernanke as a hero for saving us and everything like that from the Great Depression. But he's going to tell us the real truth behind it. And again, he's a best-selling author, an amazing man, unbelievable insight on the Federal Reserve. And what he will say will blow your mind. And we'll hear that a little bit later. But the call-in number, 866-977-4820. That's 866-977-4820. And right off the bat, folks, I just want to say one more time, my name is Gareth Soloway, Chief Market Strategist here at InTheMoneyStocks.com. And we're going to just step aside for a quick radio break or a little commercial break. And when we come back, we're going to go into last week's action and then ultimately give you guys the new picks for this coming week. What's going to make you money this week and how do we need to view the market? But again, let's first take a quick commercial break and we'll be right back.
Here's Gareth Soloway with more In the Money stock market action on AM 820 News.
All right, welcome back, everyone, on this Sunday, February 9th, 2014. And, what I want to do now, folks, is just get back into Wall Street and what happened last week. I want to cover that since we have that interview a little bit later that I'm going to play. And it's a very, very important interview with Edward Griffin, again, best-selling author, film producer, political lecturer, amazing man, amazing insight. All right, but first off, let's go over last week's market action. So what we saw last week was a market where the stocks initially on Monday got absolutely crushed, right? We had this huge, huge down day on Wall Street. And, at that point, think about the emotional reaction. And I want to tie this to emotion today because it's the biggest issue that the average investor goes through. All right. I'm a chart reader, right? And that's how I make money. And I look at the charts and they tell me basically what to do. And when I read charts, and one of the reasons why I encourage you to learn how to read charts is to essentially bypass your emotion. Because the charts are like a foreign text, right? If I were to pick up, I don't know, Japanese text or any other text that's in a foreign language that I don't know, I would look at it and I'd be honestly, I wouldn't know what to do. I would look at it and I say, I have no idea what this says. But that's what a chart is to the average person. And the idea is that if you learn the language of the charts, they basically unveil themselves. They decrypt, you see what exactly the chart is saying on an individual stock. And it allows you to go in with a high percentage and be right. And that's really what it's all about. So I want to encourage you guys, again, not only to get into chart reading just a little bit, but also get into, understanding how to control your emotions. Because if you can control your emotions, you won't get whipped out on a day like Monday. And I want to talk about Monday first and foremost. So Monday was one of the biggest down days we've seen in a long, long time. And if you listen to the media, there was a lot of panic out there. And again, we've talked about the emotional response that is triggered in the average investor when that media is kind of on that fear cycle. But one thing I just want to go over, number one, is as we see the market coming down there, it closed below a key level I gave you guys last week. And that level happened to be the 1775 S&P level. Now, initially, I said to myself, even the emotional nature of it was like, wait a minute, what's going on here? Are they going to crush this market? And then I stepped back and I said, listen, is this a fake out? And that's something that Wall Street does often. And I want you guys to remember this from today's video or this audio from today's stock market action show, because that fake out is something that Wall Street does nonstop in stocks, in the stock market itself, in commodities and currencies. What they'll do is they'll take it below an interesting level, a level that generally people look at and say, wow, that's a big level. But what I developed a technique called confirmation. And this is proprietary information. I usually don't reveal the proprietary hardcore information on the radio. It's more on our website, InTheMoneyStocks.com. But confirmation is where you confirm that the breakdown or the breakout is actually valid instead of a fake out by the institutions. All right, and just think about it from an institutional perspective. If an institution wants you to be on the wrong side of the trade and whip you out of the trade so that they can make your money, they can take your money, what they end up doing, right, is pushing something below a key level. And the average investor is going to say, oh, it's going to collapse, and it's going to see a drop. And ultimately what we want to do is make sure that we don't get faked out on that. As we saw what happened on Monday, Tuesday, Wednesday we chopped, and then Thursday and Friday we burst higher. And the confirmation signal, just to summarize it for you guys, all right, think about this. It's a close below or above a major breakout or breakdown level. But that's not a breakdown. That's not confirmation. That's the first step. That's step one. You look for either, in this case, it was a close below 1775. And then to confirm it, you need to close below the low of that breakdown candle. So if on Tuesday or Wednesday we had closed below the low from Monday, that would be a confirmed signal. Okay, and that basically what that does is it tells us that the market is officially in breakdown mode. All right, this isn't a fake out by the institutions. Now, if it doesn't confirm, you still need to say to yourself, listen, this market can reverse back to the upside. Okay, and certainly that's what happened there. It was interesting because Monday we had the big down move. Tuesday we had a little bit of a bounce. Wednesday we retested those lows but never broke it, and that's very important, like what I said about confirmation. Okay, and then Thursday we rallied up. Friday we rallied up and ultimately brought us into some good profits from the trades I gave last week. All right, we have a caller on the line, Bill from Clearwater. How you doing, Bill?
I'm just fabulous. How are you today?
Good. You surviving in this wild market?
Oh, it's a moneymaker.
Nice. That's the right way to view it. I agree 100%.
Have a lot of fun. So if you can go to Las Vegas, you can play on the win side.
Exactly. So wouldn't that be a nice thing to do? Would be in Vegas and actually be the house for a change.
Company Advanced Cannabis, CANN. Your thoughts?
All right. So this is I assume this is related to the marijuana industry, from what I'm seeing, right?
Yeah, Colorado company.
All right. Let me take a look at it. The chart's actually not bad. These marijuana stocks, I made a bunch early in the year when they had their initial run, when I think it was Colorado legalized at the start of the year. But right off the bat, it actually doesn't look bad. What I would do is I'd inch into it slowly. So let's say you're going to invest, I don't know, I'm just going to pick an arbitrary number, $10,000, let's say. Because it has a bull flag, I think you can make a small buy in this range. But what I would do is I'd buy a quarter of that position in this range, and as it slowly comes in, buy a little bit more each time, like another quarter, another quarter, another quarter. Because it has a great chart on it. I like these longer term because, again, I think overall eventually the U.S. will legalize it. More and more states will legalize it, especially for medical marijuana use. And you will see these things have another big run. All right, and these ones that are out there right now are going to be the leading force behind it. So I think you're in good shape there, but that would be my recommendation. So for now,
well, let me pull the trigger a little bit. I'm one of the principals of the company.
Oh, wonderful.
Been in the industry out there for 4 years now.
Okay.
And raising capital is a prime concern because, as you know, it's federally illegal.
Of course.
And no banks will touch it quite yet. Although the AG's office has come out with some generic, not so disturbing opinions, but the FDIC has so far stayed on the sidelines. Bank of America has taken a bold move and said that they would open bank accounts in Washington for people that had licenses.
Interesting.
And so finding funds, because if you're good at this, you need money to, pardon the pun, grow.
Right.
And the more you grow, the more you grow. And so you need cash to do that because, once again, you can't go get a line of credit. You can't hockey real estate and that kind of thing. So
okay.
This is one of the reasons we spun off this little division of our company and took it public.
All right, let me just ask you a question. Have you found that, I mean, from more on the private investor side, on the hedge fund side, have you found interest from investors in that regard? I mean, I know from the banks it's very hard to raise money.
We have, but the hedge funds, all those people want too much. Mm-hmm. We have a good thing. We don't want to give that part up.
Absolutely, and that's understandable.
There's a lot of, and there's of course a lot of people that want to invest in the industry, and they just don't know how. And I mean, if you look at this stock, there's no reason for it to be at $12, $13 a share. And if you look, it flew up to $23 a share.
Right.
With 300,000 share volumes, which is significant.
Right. All right. Well,
and so we're all our principals. All of us are all friends, and we're trying to figure out who's buying the stock.
Right. Well, that's the key here. So listen. I mean, bottom line is, when I'm looking at the stock itself, I actually like the chart itself, and I'm really just a chart follower. There's a lot of underlying things, a lot of fundamental things that we can talk about later, just in regards to investing that I think we all need to be aware of, but they're not a make or break for me. One thing I always stress to investors out there is, if you're going to invest in something, analyze your risk to reward. And obviously, the market for medical marijuana and marijuana out there and marijuana stocks, they're going through a tricky thing right now because it is federally illegal still. But there is obviously states that are legalizing it. Now, I think eventually, as the voters turn more and more towards saying, all right, listen, let's tax it, let's make some money that way, we can make a huge amount, maybe pay down some of our debt in certain ways, I actually do think it will become more and more viable. and these stocks should be doing better and better. But one thing I will say, folks, these do carry a lot of risk because of that, all right? You know, if they can't get funding, that's going to be an issue. Now, again, I think there will be many of them that survive, but remember, when you're taking a higher risk investment, always go a little bit lighter on the money that you're investing in it. Okay, so that was a great call. Thank you, Bill from Clearwater. And what I want to do here, folks, in the last couple minutes is just basically go over the trade alerts for this past week, and I want to go over the trades for the coming week, all right? And then when we come back from break later, we're going to talk to Edward Griffin, and that should be fantastic. But number one, last week's trades. Cena long at 65.19. It went to 67.12. So from Friday to Friday, about a $2 gain. Beautiful gain right there. Corn, which has been a long-standing player, that was a beauty. Up from 30.90 from last Friday to this past Friday, 31.61. Great gain there. Chevron, which dipped early in the week, came back strong, and from 111.63 to 112.05. Very nice little gain there. Molycorp MCP from $4.85 to 5.02. Good gain there. I think that's about a 2%, 2.5% gain in 5 trading days. That's not bad. And then Freeport McMoran, which was the one that was down today. I am donating $100 because of that. And ultimately, that was down just 6 cents, but in all fairness, it's still a loser, so I donate and help a charity. Metropolitan Ministries will be that charity. All right, one last thing to go over here in the last couple of minutes here, the picks for this week, folks. And again, let me just bring them up. A couple things. We're going to stick with corn. So we're using the new price from last Friday, $31.61 per Friday's close. Going to hold that one long. JCPenney is my quarterly play, but for this week, I'm going to use it as a weekly play. I like the price action later in the week last week. The entry price from Friday was $5.51, so that's a long as well. So corn, C-O-R-N, JCPenney long as well. And also, one of the last ones that I'm going to give you guys here is silver, and we're going to use the SLV, and that's from a closing price of $19.27. So SLV. We'll go over this a little bit more when we come back, just before we get into the interview. But right now, we're going to go to a commercial little news break here, and then I'll be right back, and we're going to get into that interview.
Now back to In the Money Stock Market Action on AM 820 News. Here's Gareth Soloway.
All right, welcome back, everyone, here as we get into the second half of the show today. So I just want to go over the trade setups for this coming week again, just to make sure everyone is on pace and on par with that. All right, so number one, JCPenney long at $5.51 per the Friday close. Corn, C-O-R-N, which we've been long for weeks, and it just makes us money every week, so I'm not going to stop that one. That one still looks good. The chart looks good. And by the way, if the chart starts looking bad, then we'll not give it. But right now, it still looks good, so that's a long at 31.61. The next one is silver, and by silver, we can play it with SLV. That's the symbol of the ETF, and that's from 1927. And there are two other plays I'm going to give, but they have to hit these specific levels to trigger. So I want you guys to make sure you understand that. I gave that a couple weeks ago, and it worked out perfectly. And I do this because there are certain things that, unless they get to a key level, I'm not going to like. Okay, so number one, the S&P 500. I want to short this thing at 1805. All right, which is just a little bit. I think we closed at 1797 on Friday. At 1805, if it hits that, I want to short the S&P 500. How do we do that? We can short the SPY, which is the tracking ETF, at around 180.5. Or we can buy the SDS when that 180.5 on the SPY hits. And SDS is a 2 times short. You'd go long SDS to be 2 times short the S&P 500 or the SPY. The other one is SGG, which is a sugar. It's the sugar ETF. And it's been hammered like anything. And the key here is the chart has been pulling back after a huge run over the last week. And if the chart pulls back to 52 on SGG. Right now it's at 52.84. So if it hits 52, then that is a long initiated. So basically you use a limit order, which means that unless you get $52, it wouldn't trigger that. Okay, so that's what we have there, folks, and what we're going to do now is we're going to get into a very special interview here. And again, on today's show, as I said earlier, I want to have you guys listen to my interview, my discussion with Edward Griffin. I sat down with him last week. He's a best-selling author, film producer, and political lecturer. He's the foremost authority on the truth behind the Federal Reserve, and his book titled The Creature from Jekyll Island is a bestseller, and again, an amazing book. So let's listen into that interview now. I consider myself extremely lucky today, folks. You know I strive to reveal the truth about Wall Street and the Federal Reserve, evening the playing field for all investors. So today, in the Money Stock Market Action on 820 AM News Talk Radio, I have a very special guest by the name of G. Edward Griffin. He is a best-selling author, film producer, and political lecturer, and wrote about it in his best-selling book called The Creature from Jekyll Island. I am truly honored to welcome him to the show today. How are you, Mr. Griffin?
Well, I'm very fine, and thank you for that very generous introduction. Thank you for inviting me.
Oh, it's my pleasure, and again, thank you for joining us. So what I wanted to do here today, I have listeners out there, and I'm trying to really reveal the truth behind Wall Street and behind the Federal Reserve to the average investor. And I've noticed over the course of years of trading the markets and investing in the markets that the average investor is so ill-informed about what's really going on. And I always find them getting caught off guard, being on the wrong side of the trade, being on the wrong side of a lot of things because they just don't have any idea about the truth behind everything. So I'm glad you're here today to discuss the Federal Reserve with us. And I'd like to start off by asking you, who were the founding fathers of the Federal Reserve and why did they want to form it?
The founders of the Federal Reserve were the largest banks that existed in the United States at that time, which was 1913. The Federal Reserve was offered to the voters as a means of controlling the big banks because the Americans were concerned over that concentration of power that was in the hands of these financial institutions on Wall Street. And they wanted Congress to pass some kind of legislation that would control these big bad bankers. And so the bankers decided that it was coming. Why should they sit back and wait for their opponents to draft that legislation? They decided they would draft the legislation. And so they met in secret, and literally under great conditions of secrecy on Jekyll Island, which is the reason for my book. It's a private island off the coast of Georgia. It was owned at that time by a small group of billionaires from New York, among whom were the very bankers that we're talking about. So they went to this private location, and they drafted what would become the Federal Reserve Act. And what they did really is to create a cartel agreement. They decided they would set the rules up to control their own industry for their own benefit. So they drafted their cartel agreement, and then they took it to Congress. Part of the story of how they sold this idea to the American people, it was really a good thing. Started in 1910, and the Federal Reserve Act was passed in 1913, and what people don't realize is that when they passed that law, what they really did is they took the cartel agreement, converted it into legislation. So now the American people are subject to punishment and then go to prison if they do not conform to the rules and regulations set by the banks themselves for their own industry. So if you don't understand that, and you expect that the Federal Reserve System is acting as a government agency on behalf of the American people, then you're going to be very confused as how come it keeps failing. But if you understand that it's really a banking cartel, and it's how you understand everything because that's what it has always done and what it will always do as long as it exists.
Wow, that is fascinating. I mean, it's amazing stuff. So really, these banks saw that the people were in a rising up and saying, listen, we need more controls on these banks. So they got ahead of it. And, am I right in thinking that people like J.P. Morgan and Rothschild, I mean, these were the people behind it, people that we've all heard about, but we didn't necessarily know they were the ones behind the Federal Reserve. And the whole idea here was to create the Federal Reserve so the people would think that the banks were going to be controlled, but behind it, these big players were right there.
Yeah, it just turned out to be exactly the opposite of what the American people thought it was. And, of course, that's an old trick. That card has been played many, many, many times. It's being played as we speak today, and it's being played in Wall Street. It's being played in the healthcare industry. It's being played in the utility industry. No matter where you look and you see a lot of public concern over some Congress is offering this legislation with all these magnificent sounding titles, the legislation to help America, or whatever it is. It sounds always so good. Well, you peel off those labels and you find out it's usually just the opposite of what it sounds like. It's being drafted by agendas, hidden agendas, being drafted by powerful financial interests, usually traceable back to the Wall Street crowd, because they have an interconnecting network through boards of directors and bank credit lines and so forth. It's a powerful web of control.
So now, how does the Federal Reserve just create money?
They have a mandate that requires them to do that, and it was their mandate. We got to keep that in mind. Congress didn't mandate this. It was the banks that mandated it, and they got Congress to approve it.
So really, you got the biggest bankers in the world, the richest in the world, supposed to be controlling the biggest banks in the world, and they have the ability to create as much money in the world as they wish. It really seems like they have all the power. I mean, that's the essence of it.
I think that's about it. If you want a capsule summary of what's going on in the world, I think you just did it.
Thank you. So now, what was the reasoning for going away from the gold standard? Was that because the gold standard was keeping things too much in line and they couldn't print enough?
Yeah, basically that's it. You see, it puts yourself in the position of a bank. How does a bank make money? Well, they have a lot of ways. They charge fees, service fees for this, that, and other thing. But the primary source of income for a bank is interest on a loan. So the more loans they have, the more money they make. If they couldn't loan any money, they wouldn't make any money. And so, like any business that makes money from selling or renting its inventory, it likes to have a big inventory. If the banks were limited in the amount of money they could loan, they wouldn't make much money. And so what they want is a system in which there is an unlimited supply of money to loan at any time. You see, just imagine that the banks were restricted in the amount of money they could loan. Were restricted to the amount of gold or silver that people have taken to the banks and put in deposit in their vault. If that was their inventory, okay, wow, that's quite a small inventory, isn't it? So how are the banks going to get rich on that? They can't. So banks have always instinctively, and for their own self-interest, said, no, we need a flexible money supply. And so they'll find all kinds of ways of telling us that that's good for us. It's good for the economy. It's good for the world, all that sort of thing. They sell the idea like crazy, and they do a good job on that. But basically their motive is so that they can have a larger inventory to loan into the marketplace. The plot thickens because the banks often make bad loans. Now, if it was their own money and they wouldn't be bailed out if they made a bad loan, they would go out of business. And so they would have to be very, very cautious on to whom they lend this money and under what conditions. But knowing that they have this very cozy relationship with Congress, that if they make a bad loan to a third world country or a large corporation or whatever, and they're going to go bankrupt, we're talking about the banks now, well, they just go to Congress and say, we need a bailout. Congress says, okay, how much money do you need? How many billions, how many trillions of dollars do you need? And they bail out the banks. And so the banks go back and continue to make bad loans because they cannot lose. You see, they can't lose. The taxpayer is always standing by to bail them out.
So it's take as much risk as you can for as much reward because you know you can't lose. I mean, there's no downside.
You cannot lose. That's right.
Wow.
So there you have the other side of that coin.
Wow. So now one thing that you said that struck me, and I think our listeners would be particularly interested in, is how you say the Federal Reserve is really just taxing people when they create money. And can you explain that a little?
Well, I call it a tax, and I'm not the only one that uses that phrase. It's a tax because people pay it involuntarily. And it's a tax because it shows up in the form of inflation. When you expand the money supply at a rate faster than the expansion of goods and services, back up just for a second, if the money supply and goods and services expand evenly, which they tend to do in a free market, but then there's no inflation. Your purchasing power remains very stable over a long period of time, which it always has when the money was backed by gold or silver. But the minute you break that away and you give these politicians and bankers the authority, of course, the brakes are off, and so the money supply always expands at a rate faster than the expansion of goods and services, which means when you follow that out that the purchasing power of each unit, each dollar, becomes less and less in terms of actual goods and services. And so inflation is the result. That's how we think of it. We think the prices are going up, but in reality they're not. What's really happening is that the value of the dollar is going down. And so our purchasing power goes down, and even though we're getting little pay raises here and there, and we think, oh, by golly, we're making more money, which we are, But our purchasing power is still going down because the value of the money that we're earning is going down faster than our pay raises. So this loss of purchasing power is coming out of our wealth, our savings, any money we put aside for, retirement or any kind of future expense is being whittled away by this process. And we don't want it. We don't approve it. We don't like it, but it's happening whether we like it or not. And so that's why I call it a tax. It's a hidden tax. And it's perhaps the most insidious of all taxes. And that's just because the dollars are becoming increasingly worthless, And at the end of that line, they've become totally worthless. All economies, all monetary systems which have traveled this path throughout history, without exception, have ended in total collapse. The money becomes totally worthless. And people who had any savings at all in terms of currency or money were really wiped out. It's going to happen here because it always has, and the logic is behind it also. Why would it do anything else? If you give somebody the power to tax you, whether you like it or not, it's not government now. We're talking about banks and governments combined in this partnership called central banks, and that's the technical name they give it. In our country, we call that central bank the Federal Reserve. You give those people the power to steal money from you, what are they going to do? They're going to steal money from you. And they're going to keep doing it more and more and more until finally they got it all. And then you say, what happened?
Wow. So just to go back to the kind of the hidden tax you were speaking about, is the reason that they want inflation at 2% at this stage is because the government needs that expanding money supply to pay its debts at this point? I mean, is that what's behind it? Or?
Well, that's a good question. Now, we're talking about what their motives are. And, I have my own personal opinions, but I think motives probably vary from person to person or group to group. On the cynical side, you could say, well, they do it because they can, and they think they can steal 2% and nobody will be too unhappy, so they set that at a very nice, moderate level. So we're only going to steal 2% from you every year, so don't worry about it. It's not so bad, is it? And people, no, that sounds good.
Yeah, it doesn't. Yeah, that's true. When you say it like that, it doesn't sound like that much, But yeah. Wow.
But it's 2% every year, another 2%.
Oh, jeez. Now, let me ask you a question in that regard. I mean, we've heard about Bitcoin, and Bitcoin is obviously gaining in popularity. And, I mean, do you see at some point down the line just an epic collapse of the financial reserve and banking system to the point where it has to start from the ground roots up again and is based on gold again or anything else like that?
Well, I think that if we lived in a free market, or if we lived in a system that was not, let's say, a command economy we have now, because now by political decree, they can just command any financial relationship or rule that they wish. If that were not the case, then I would say yes, the existing system would collapse under its own weight. It should have collapsed under its own weight a long time ago. But it's not allowed to under a command economy because the people are not free to do what they would do. For example, if let's say you and I decided we didn't want to use Federal Reserve notes anymore. We wanted to use gold or silver coins. We would not be allowed to do so. It's against the law for us to use. You see, they call these things legal tender laws. They require the citizens to use the funny money. Otherwise, people would escape. So if we had the freedom to abandon the funny money and use something of tangible value, even if it were Disneyland coupon books or something, had some value behind it, then I would say yes. But under a command economy, which we have, the answer, unfortunately, is no.
Now, when it comes down to, something like Bitcoin, I mean, do you ever think that would gain enough momentum to possibly be an alternative to the dollar, or would they clamp down on it at some point and say, hey, listen, this just isn't allowed anymore? Would they shut it down? Would they stop that?
Well, I think the way to answer that question is to ask yourself, what would you do if you were in their position? Beneficial for you. Gives you all the money, and somebody is challenging your power and your unique position. What would you do? Well, you would do everything you could to get rid of your competition, wouldn't you? So
wow, absolutely.
It's foreseeable that governments which rely on this inflation game, this fiat money game, will not allow Bitcoin or any other challenge to their system to be materially expanded. I mean, they may allow a little bit here, a little bit there, but if it ever gets to the point where it's a serious challenge, they will send out the Marines, if necessary, to put it to.
All right, folks, I'm just breaking in here. We're going to take a quick little commercial break. We're going to come back and hear more from G. Edward Griffin, best-selling author, and he wrote, again, The Creature from Jekyll Island. And, again, this is In the Money Stock Market Action on 820 AM News Talk Radio.
Here's Gareth Soloway with more In the Money Stock Market Action on AM 820 News.
All right, welcome back, everybody. What we're going to do is we're going to go back right into that interview and listen to more from G. Edward Griffin, and let's get right into that now. All right, so now, just as an average investor out there, I mean, is there anything that we can do?
First of all, even though we have severely limited freedom in what we can use in the form of financial instruments, we do have a little bit left, even though they continue to whittle away on it. But we do have some, so I think we should do everything we can to get away from the currency. These inflating currencies. In other words, if you have savings, if you have any of your wealth wrapped up in U.S. dollars or whatever inflationary currency you want to choose, and they're all in that category, I would say keep only what you need to pay your utility bills and your grocery bills, your daily, weekly bills. Anything beyond that would be a storehouse of value. You're losing value every minute on that. So it just doesn't make sense to keep your wealth tied up in an instrument that is continually losing value as we speak, you know. So what does that mean? You have to put it into something of tangible value. Gold and silver is still an option. They haven't completely gold or silver yet, although I expect they'll probably try that, at which point people have to decide, are they going to go along with it or are they going to become criminals and just defy the system? That happens over and over in history, and most people who have any wealth at all decide to become criminals because they're not going to just meekly turn over their life savings to their masters, you know. That's the way it works. And now you're really in a bad in a bad environment now, because now you're living in a totalitarian system where people are considered to be criminals if they're not totally abjectly grateful to their masters. So that's one thing I would say is think it through. Decide, are you prepared? Are you prepared to stand for the preservation of your life savings, and then take whatever action you can? Now, there are other things than gold and silver. Real estate, of course, is an obvious choice, but there are taxes on. It's out there in the open. It's out there in the public records, and the government declares that you are an enemy of the state for any reason. Maybe you voted Republican or Democrat or Independent or something, and they consider that to be worthy of making an enemy of the state. They could then confiscate your property. They could go into the courts and say this person is a terrorist or something, and therefore his property now belongs to the state. So you think about property. Well, that's pretty vulnerable. They can confiscate that, where at least you can hide your gold and silver in a coffee can, bury it in the backyard. They don't know where it is. We're talking about some very unhappy situations here, aren't we? But these are the options. Yeah, these are the options we have to think about. So you can help to preserve what you have in dire ways such as I'm describing. But the ultimate, now I come to number two, the ultimate solution is not trying to avoid the consequences of a totalitarian system. The ultimate way is to change it, is to get back into the system, take control of it, and recapture it, and convert our country back to the constitutional republic it once was. Now, that's not easy, but it's possible, and that's the reason that we created an organization with that goal in mind called Freedom Force International. And so anybody that wants to think about that, I know we don't have time for all of this, but if you want to think about becoming part of the solution and not just trying to avoid the problem, then I urge you to come to our website. It's called freedomforceinternational.org. Give us a read. I think you'll like what you find there.
All right, excellent. I'm writing that down myself right now. And can I join it? Is it a membership that I can join?
It is, absolutely. We have members in, let's see, I think the last count was about 56 countries. So
wow.
the problems we're facing are similar all around the world. It's not unique to us. And we're going to solve this problem on a global basis, or we're not going to solve it at all.
Get to that point where we redo the system because we just have everyone behind us. And I think, if there's a few people here and there, the Fed can probably come in and just squash it, or the government can come in and squash it. So it has to be a total movement, if you will, So I'm glad you said that.
Across the board, yes. And it's not going to be done with guns and bayonets. That's not how we lost our country. We lost it because they're very influential and powerful men who were very smart, who gradually took over the power centers of society. They moved into the political parties. They moved into the church organizations, the educational system, the media center. And just a few of them, less than 1% really, took over control of the groups, the power centers of the nations of the world. And in that way, a few people can control the whole. That's how we lost our country, not through invasion by a foreign enemy, but by enemies from among us who moved into our institutions and took them over. We have to recapture our institutions just the same way we lost them.
And just a couple, just because you're making me think of great little comeback questions that I'm so curious about. I hope you don't mind. But now, the divergence in the wealth gap, right? I mean, is that the beginning of that possible movement as you have this 1% at the very top, super wealthy, and then the middle class is disappearing? I mean, is that possibly the start of this kind of movement?
Well, that is, when you're talking about the movement, you mean the movement for restoration of liberty?
Right, as people just, are finding that no matter how hard they work, they're just losing out on buying power. It's getting harder to survive.
Yeah, I think that's certainly one of the wake-up calls, isn't it? And I think one of our problems has been in the past that life was so comfortable that people really didn't care that much. They're smart people, they're powerful people at the top. Yeah, a lot of them are crooks. Who cares? I'm doing well. As long as people are comfortable and they don't really see the mailed fist underneath a velvet glove, they'll put up with it. But then when things really start getting rough, then they take an interest, and that's the time for change. So I guess there is a bright side to all of this, that things are getting rough. That's bad, but by the same token, people are becoming aroused now and taking an interest in these issues which they haven't before. And only then do we have the necessary ingredients for true change.
Wow, amazing words. Any last things you would like to just tell the listeners out there?
Well, the listeners let's wake up and smell the coffee. Things are bad, but they're not totally bad. When you look at any period of history, I can't think of any time in history that I would rather live in than right now, even though.
All right, guys, we're stepping in here as we come to the end of the show today with about a minute or so left, and just a great interview and very enlightening by G. Edward Griffin. And again, I thank him for being with us, and make sure you go out and buy The Creature from Jekyll Island. It will blow your mind, the things he reveals there. Just to summarize, folks, in regards to the stock market this coming week, all right, we're looking at resistance at the 1805 level on the S&P. Start getting in a bearish mode for your next leg down. And again, we talked about the plays for this week, which include CORN, JCPenney, JCP, SLV, which is silver on the long side. And then again, if the key levels are hit on SGG and the S&P 500, look to short those. And overall, folks, we got our bounce in the market. Now let's start looking to the downside. Have a great afternoon, great Sunday, folks. My name is Gareth Soloway, Chief Market Strategist at InTheMoneyStocks.com, and this is In the Money Stock Market Action.